All right, so what is the right way to trade tops and bottoms then? I'm sure you're saying, well, Steve, you said there is a right way to trade tops and bottoms, so what is the right way? Well, the right way is simply to go with them. All right? We are not going to try and stand in front of a currency pair that is going straight up and then say, I'm shorting you, you will not go any higher. All right? Or we're not going to stand in the way of a currency pair that is going straight down and then say, I'm going to go long now, you're way too oversold, you'll not go any lower. I mean, that's ridiculous. It's ridiculous. Who are we to say where it's going to stop or where it's going to top out, where it's going to bottom? So the easiest way and the right way, once you see these tops and bottoms, is to go with them, to jump on board. All right? If you were swimming in a river and you wanted to get from point A to point B, which would be the easier way to swim? To try and swim upstream against the current, against the flow, or to try and swim with the current at your back? Obviously, it would be the latter, the second way, right? So we're going to go with these tops and bottoms. Once we see that they're formed, we're simply going to jump on board. All right, so let me share with you what this technique is. And remember, once again, this is where students have a big difficult time here. This is a technique to spot these tops and bottoms. This is not a full-fledged strategy. So please, once your eyes light up when I show you how to use this, do not just simply jump out and start trading it this way today. You have to know a lot more things, which I'll explain about later once you become a member of Specialist Trading. All right, so let's look back at our old chart here. We looked at the dollar-yen when we had a tough time. We initially were told, well, this is where you go short, okay, right here, and then you go short again, and you go short again until ultimately it just keeps going higher, right? All right, so what we want to do with any chart, and remember, we can use this on any time frame. We're just looking at daily bars now, but even if you were looking at hourly bars, at 4-hour bars, if you were looking at 5-minute charts, you could still see the same phenomenon. So I don't want to just make you think that this only applies to daily bars. It applies to any time frame and in any direction. So here's what I want you to do. Regardless of the time frame, regardless of the currency pair, first thing you're going to do is plot a 50-period simple moving average. Okay? That's our first rule. And we want to see that if we're going to go with a top, if we're looking for tops, price must be, regardless of time frame, regardless of currency pair, price must be above the 50-period simple moving average, which it is. You can see here we don't have enough space here in the chart, but we've been well above this 50-period simple moving average going back a long ways. Okay? So we are above the 50-period simple moving average. This means we are looking for tops. Okay? We're not going to look for bottoms if we're above the 50-period simple moving average. We're only looking for tops. And remember, we're going to go with these tops. We're not going to short them. We're going to go with them. Okay, so we've fulfilled the first rule. We're above the 50-period simple moving average. Next thing we want to do is we want to spot all these so-called overbought areas, as we see right here. This is where the threshold or the indicator, whatever we're looking at, is above the standard threshold. For the RSI, it could be something else. For other oscillators, whatever the standard oscillator is for overbought or oversold threshold, that's what we want to find. Now, in this case, we're looking at a stochastic, your standard stochastic indicator. And here is the overbought threshold at 80. Excuse me. So what we want to just do is make sure that we see all these areas where we are in the so-called overbought section. We're not concerned with these levels here where we're below the threshold, as you see right here. We're only concerned with areas where we're above. So once we find these areas, or once we see that we are in these so-called overbought scenarios, what we're looking for is a pivot that is made. In other words, a high followed by a higher high, followed by a lower high, which makes this kind of shape as you see right here, high, high, lower high, which is kind of like a V. So we only want to see what those are formated once we're in the overbought area. And so if we look here, we have a pivot high right here. We have a high, followed by a higher high, a lower high. And this was all made in the supposedly overbought scenario. Now here's one that was made right here, a high, a higher high, and a lower high, but this was not in overbought, so we didn't categorize that. We didn't mark it. But all the way here, these are all these pivot highs, okay, as we see. So why are we marking these pivot highs? Why are we interested in this? Because these are the places where we want to see that we break above. Remember, there's no such thing as overbought or oversold. Usually, when you get into fifth gear with these scenarios, we break these pivots and go much higher, as you saw. So how are we going to go with it? We'll simply use these as entry points. So in the first scenario right here, once you saw that this was formulated here, this pivot high, you would have made a little mark here on your chart, as we do here. We have a green horizontal line, and just said, once we get above there, I'm going to enter and go long. and this would have been your entry point. So once we trade right at this level, you would have gone long. And so on right here, and so on right here, and so on all the way up. So you see, we're using what people view as tops, but we're looking at them as entry points. We're not going to try and say to the dollar yen, okay, you've gone high enough, I'm going to short you right here because you've been overbought for 3 weeks or 2 weeks. No, that's ludicrous. It's your ego speaking. You're not going with the current, you're swimming against the current. We want to go with the current at our back. So if the current is telling us we're in overbought, most likely we can go as high as we'd like. So we simply want to use these pivot points, these little short-term highs, as our entry. Once we go above, we enter. It's that simple. Okay? Remember, we're just talking about an entry technique here. I know a lot of you are saying, well, where would I place my stop? Where would I exit? Where would I, cover my trade? We're not concerned with that right now. This is just an entry technique. Now let's look at some recent examples. I know a lot of people say, well, how valid are these scenarios? Do they work a lot? Or, I'm not sure if it works in today's markets. Well, let's look at some recent examples here. A lot of people have been saying, boy, the British pound just keeps going lower and lower. It's starting to bounce a little bit, but, how high are we going to go? Did it reach some type of bottom? We don't care. We're not interested in whether it hit a bottom. And I know you see it all the time, and economists and educators saying we've bottomed out, we've hit a top. We don't really care if we've done these things. What we're looking for is just to go on board. We want the market to give us clues, and then we just simply jump on board and go with it. Doesn't matter if it's going lower or higher. We're just doing what the market wants to do. The market wants to go lower, we're selling. The market wants to go higher, we're buying. It's that simple. Remember, my trading was like 99.9% of all traders, and I couldn't make a dime. Once I stripped away all of these things, all of these conventional wisdoms, which my mentors called and labeled useless noise, they said, let go of that stuff. If it works so well, why aren't you making any money? And I simply let go of it, and that's when I started to become consistent. So we're not worried about whether we made a bottom or a top. It doesn't concern us. All we want to do is we want to look at the British pound, and this I believe was up until a couple of days ago. This chart is very current. And for all intents and purposes, we're below the 50-period simple moving average, okay? So right off the bat, you know that since we're below, we shouldn't want to buy anything. There's no interest because the currency pair is telling us that it's below its average, so most likely it's going lower. So what we want to do now is look for those so-called areas where we labeled as oversold, where people would have thought we bottomed out. Okay, these are right here. This is the same stochastic that we've been using in the other. It's just very standard. It's on every standard charting software package. All right, so here's your stochastic, and this is the so-called oversold area where people will look for bottoms. Had you done that, you would have really had a tough time trying to pick a bottom in the British pound. Remember, as we stated, this is a recipe for disaster. So the best thing is just to go with it. Now what we want to do is look for those pivot lows. Those are a low followed by a lower low followed by a higher low. All right, all along the way here. So this is all we're looking for. We're looking for this simply type of way to trade going with the flow. I see a lot of people asking questions. Remember, as I stated in the beginning, please wait till the end of the presentation to ask any questions. I know a lot of people like to ask. Just write them down, and I'll get to all of them at the end, okay? All right, so let's look for all those pivot lows were made. As we can see here, we have a low followed by a lower low followed by a higher low. So here's one right here. We have another one, another pivot low. We have another pivot low. And remember, we're only looking for the pivot lows that were established in the oversold area, okay? Because ultimately, if we're going lower, those lows are going to be broken. They're going to be met. They're going to be matched, and we're going to probably go lower. So what we're looking for is just to mark these. And as we said earlier, these would have been your sell entry points. This is where the areas where you would have entered to go short. Okay? And you see how this is much more conducive to going with the flow, a much simpler idea than rather trying and pick a bottom in the British pound. I know all these people would say, well, we've come to this support, we've come to this Fibonacci number, we've come to this news that is coming out globally and economically, the British pound should stop. We're not interested in that. Remember, those are all outside sources that all they'll really serve to do is just confuse you. It would have been much easier and simpler and much better on your account had you just gone with the flow, and the flow was telling you, the market, the only thing you should be listening to was telling you, I'm going lower, okay? So just go with it. So as you see here, in this current chart, which was just, I believe, a day old, we are still below the 50-period simple moving average. And if we, once again, come back lower and get to this point, this will be another sell entry point to go short the British pound.